So I'm very pleased to be here today at the NJPAC to have the opportunity to speak with members of the Business Partners Roundtable. In my remarks, I'm going to provide an update to the national outlook for 2015, as well as to discuss economic developments in New Jersey. So my meeting with you today is part of our continuing efforts to understand what's going on at the grassroots level of our economy. We plan these trips so that I can meet with a diverse array of stakeholders in the region. This allows me to get a comprehensive picture of economic conditions in the region and a fuller understanding of major issues and concerns. This is our first regional trip for 2015, and it's the third time we've visited northern New Jersey in the last 4 years. The data we follow suggests that the household deleveraging process has largely run its course, and the imbalances in the housing market have been mostly worked off. Federal fiscal consolidation appears to be over for now, and employment and spending are increasing again at the state and local level. That said, economic performance in this cycle has been disappointing compared to historical norms. Even though household wealth relative to disposable income is nearly back to the pre-financial crisis level, and conditions in the labor market are substantially improved, consumer spending growth has been slower, and the personal savings rate has been higher than one would expect based on past historical relationships. Similarly, even with very low mortgage rates, single-family housing construction has been surprisingly sluggish. And despite very accommodative financial conditions and record corporate profits, growth in business fixed investment has been tepid. Looking forward, my outlook for 2015 is that economic growth will be close to the pace that we've seen over the past 2 years, supported by continuing solid fundamentals and accommodative financial market conditions. If I'm correct, then, this would lead to a further reduction in the labor market slack, with the unemployment rate approaching 5% later this year. An important element of this forecast is continued strength in household spending. This strength is supported by healthier household balance sheets, improved household income prospects, and the benefit of significantly lower energy prices. The data for the second half of last year reflect these positive forces. Real consumption, personal consumption expenditures rose at more than a 3% annual rate in the third quarter and more than a 4% annual rate in the fourth quarter. This strength in consumption was also accompanied by solid income growth, as real disposable income increased at more than a 3.5% annual rate in the fourth quarter. This reflects the benefits of lower energy prices and a stronger labor market. The unemployment rate was 5.5% in March. Analysis by my staff suggests that the unemployment rate is nearing a point where we could begin to expect to see a pickup in the pace of real wage gains. If this proves correct and employment continues to decline as I expect, then these stronger wage gains could also help support solid income growth, even if the pace of employment growth slows somewhat. However, it's going to be important to monitor developments to determine whether the softness in the March labor market report that we saw on Friday, whether that foreshadows a more substantial slowing in the labor force than I currently anticipate. So now let's turn to the New Jersey economy. One feature of the state's economy is its industrial diversity. The sizable number of jobs in the state are in healthcare, professional and business services, wholesale and retail trade, leisure, and hospitality categories. When we look at the northern part of the state, we see a greater concentration of jobs in finance, particularly in Hudson County. Also prominent are goods distribution jobs related to the ports, rail lines, and trucking and warehousing. Other large sectors include pharmaceuticals manufacturing and research and development, as well as private education. Looking at recent trends in northern New Jersey, the recovery in the economy in general, and employment in particular, is lagging the nation and is not going as well as we would like. The Garden State's economy lost 250,000 jobs during the recession, and employment didn't begin to start to recover into 2011. And even then, it was slow getting started. However, the latest annual employment revisions, which we got just a few weeks ago, show that job gains in 2013 and 2014 in the state were a bit stronger than previously reported, so that's good news. Nevertheless, 4 years into the recovery, employment has recovered less than 2/3 of the job losses that occurred during the recession. This contrasts notably with both New York State and the United States as a whole, where employment has far surpassed its earlier peaks. Moreover, here in Essex County, there is yet to be any significant upturn in jobs, although neighboring Hudson County has seen a fairly strong rebound. So why is New Jersey not keeping pace with New York in terms of job growth? Well, much of the strength in New York State is driven by New York City. Other parts of the state have seen similar, if not weaker, job growth than New Jersey. Of course, this raises the question, why has New York City's economy been so much stronger? Well, in fact, there's a body of research suggesting that there's a long-term drift of economic activity. The long-term drift of economic activity from cities to suburbs has subsided, and that there's a growing trend towards re-urbanization, a preference for both people and businesses to locate in cities like New York City, and that's benefiting New York City. Yet, there is still a strong tendency for persistent strength in an urban hub like New York City to gradually spill over into nearby areas. With both commercial and residential rents, not to mention sales prices, high and rising in Manhattan, Northern New Jersey has an opportunity to capitalize on its widening cost advantage by attracting companies and residents that value an urban location but find New York City to be too pricey. And if preferences are indeed in the midst of a shift towards urbanization, this also bodes particularly well for New Jersey's own cities. With a major international airport and seaport, a 20 to 30-minute train ride for most of Manhattan, much cheaper rents, as well as a number of universities and a solid infrastructure, Newark has a strong potential to develop its prominence as a major local business and economic and cultural hub. Cultural hub has already been established here at NJPAC.